If a pantheon of great investors has to be made, there is one name which will always find a prominence there. That's Rakesh Jhunjhunwala. I've had the pleasure of interacting with both Rakesh and Madhu on various forums. And apart from being investors, understanding of economics, and the ability to call market cycles right, they both are extraordinary human beings. Rakesh and Madhu, thank you both for joining us. Mr. Jhunjhunwala, you see India going past China in next 25 years. You remain extremely bullish and you feel that this decade belongs to India. Let's elaborate on that. Do you think finally pieces are falling into a place both from a reform side, earnings standpoint, and from the administration standpoint?
See, even at the cost of reputation, I think India has got all the inherent qualities that are required for growth. We as a society only have to tap those qualities and enable our citizens. And I'm no politician. And I think as time is coming, India is progressing, and especially in the last 3-4 years, the reforms that have taken place in the form of Jan Dhan, in the form of the digital, the way Indian society has got digitalized, right? We always have the skills, and now the government is promoting ease of doing business, privatizing the public sector. So I think all these things are going to lead to double-digit growth in India. And I personally believe India evolves, and what evolves biologically is permanent.
Government has initiated such enormous reforms in last 2 years. A lot of work which was pending for years, whether it is labor reform, whether it is reform on the agriculture side, whether it is opening up of mining sector. In your opinion, what more would you suggest to the government and the policy maker? What are the 3 or 5 more steps which are needed to accelerate A, ease of doing business, and B, ensuring that we can actually achieve that 10% real growth?
I think PSU privatization is very, very important.
Sure.
I think the reform, holding on to the reform, and I don't understand this farmers' agitation. India is producing 1 lakh crore of rice and wheat which nobody can eat. You are producing rice in Punjab where there is no water, and the water levels are absolutely low. So we got to, whatever we decide for reform, we have to face it and keep up to it in spite of political opposition and vested interests.
Sure. Yeah, coming to markets, this all has to be translated in the market. So we have had a very sharp rise,
right,
from 7,500 to 15,000.
Right.
We are at a lifetime high, right? And a lot of stocks have also gained 3, 4, 500% from the bottom. In your opinion, while we see the economic growth at 6, 7, 8, 10% going forward in the next 5 years, what kind of returns would you say? I know that 10 years there is a large possibility, but if I take a 3-5 year horizon, which is typically an horizon for an investor, what kind of return you think can still be made in the markets?
See, Madhu, I think life returns depends on attitudes.
Sure.
Whether you want to be speculative, you want to be a mature investor. I think
we are talking about mature investors.
And see, I myself always have all my wealth in equity.
Sure.
Or 98% of my wealth.
Sure.
So I'm looking for returns between 15 and 24%.
Yeah.
Now there are times when you may get 24, there are times you may get 15.
Sure.
But I don't think the average return on equity anywhere are going to exceed between 18 to 21%.
If you could produce what return you would produce from 2002 to 2020, do you think similar returns you can expect to produce in your own portfolio over the next 10 years?
What I produced between 2002 and 2008, I don't think I can replicate.
Sure.
But what I produced between 2002 and 2020, I think I'll replicate all my life.
Oh, that is very important. That's absolutely soothing. Yes, I think this is an absolutely right time to take bold calls on cyclicals on India, because that's my opinion. I don't know whether you concur with that or not.
I can't agree more.
Yeah. So what are the sectors would you think we should play in this cycle, basically, which is starting now?
See, I mean, how long the cycle is going to last for 5-7 years?
Absolutely.
It's a buffet party.
That's right.
Anybody can eat what they want, but don't overeat.
Yeah.
So I think all sectors will perform well. And at the moment, I think the commodities, I think we are going into a very big commodity bull run, and which is going to last for the next 5-7 years. So I think at the moment, commodity stocks are the best bets.
Sure.
Especially steel, and I want to make a SEBI declaration that I'm very much interested in the commodity
sector. Everything is being disclosed and disclaimed.
No, I have to I have to give it.
Sure.
Right, I am very bullish on the commodity.
I think you played the public sector beautifully between 2003 and 2008. Right? Public sector have been a big underperformer. A lot of stocks are still 50-75% of their lows, and the public sector index as a whole is still down 50-60% from their highs. Where are we in the public sector cycle? As you say, if Tendulkar has to make 200 runs as a century, where are we? And do you think he is going to make 200 runs in this?
See, my personal feeling is there could be a valuation correction in the stock. I'm very bullish on government banks.
Sure.
Right, I'm bullish on the banking sector, and I feel the most undervalued banks are in the public sector.
Sure.
And I think the credit cycle has, which we have, it has turned.
Sure.
Going ahead, there is going to be a lot of demand for money.
Sure.
The cost to income ratio of banks is going to come down, of public sector banks.
Sure.
And there is going to be demand for money, so there will be pricing power.
Sure.
And they are hopelessly undervalued.
Sure, absolutely.
So within the government sector, I think banking is big.
Sure.
I think other than the banking sector, I don't know much about. What my advice to investors would be, there will be a run-up in the stocks in which government is going to disinvest.
Sure.
But when the government disinvests,
sure,
after that there will be a honeymoon, or there will be a maturity period of at least 3 to 4 years
sure,
before the new owners can really turn around those companies into more efficient ones.
Sure.
So I think my answer would be buy the public sector banks.
Sure.
Buy the disinvestment candidates.
Sure.
And then, you could disinvest with the government.
Mr. Jhunjhunwala, it's a coincidence, but a terrible coincidence. Exactly a year ago, the world discovered COVID for the first time. And the COVID numbers are going up again today. Do you see financial markets reacting to the second wave, which has been unfortunate, but it exactly happened after 1 year?
First, I would like to state that there is need to be, we must take precautions, but we must realize that COVID is also another flu. In India, 25 lakh people have flu every day. The virality of the virus and the mortality of the virus has been reduced considerably. So I think all this anxiousness, we should take precautions, no question, right? I think it's a passing phase, and if people sell markets because, there is COVID, I think it's the time to buy. And this was my call in May, and I made one of the biggest money in my life by making that call.
Can you just, run all the viewers who are watching you today? How do you actually take that broad sense of the market? Because knowing you for 25 years, if I have to put only one strength of yours, it will be that you have such a phenomenal broad sense of what is happening around in the market.
The question is, with the 35 years of experience in the stock markets, we have some idea of companies.
Sure.
I think every company in the Nifty I have owned sometimes, or I have short sold sometimes.
Sure.
So I have some idea.
Absolutely.
Then we keep ourselves aware of what's happening around
sure,
India and internationally.
Sure.
Right? And then we see price movement.
Sure.
And my behavioral science is just people's reaction.
Sure.
If I go to a cocktail party in the evening and nobody's talking about the stock market is up.
Sure.
I know people are not participating.
Sure.
And markets can sometimes be very treacherous.
Sure.
But they are the way they are. We have to accept them. We can't change them.
Sure.
Right? So that is how we judge. And Madhu, we have no formalized formulas, no algorithms.
Yeah.
The only rule is there are no rules.
Sure.
So it comes from a mind, and I can't reason why it comes. But the thought comes, the understanding comes.
Sure.
If this bull market, Mr. Jhunjhunwala, is like a train journey, and the train starts from Churchgate and goes to Borivali, 1 year into this bull market, where has the bull market reached?
We have reached Churni Road. This is a station next to Churchgate. So because we are underestimating two things, I think. The potentiality and the reality of what India's growth is going to be. And second is, we are a country where, $750 billion is saved. What is the money which is coming into equity? Yeah. And what are the alternative investments? So the kind of, and you remember one thing, that gain produces more gain and more investment. And if you look at the worldwide situation, where is this kind of growth possible? And with the interest rates being what they are abroad, for a 5% return in dollar terms, a phenomenal return.
Sure.
And I don't see any rise in interest rates in America, in inflation in America beyond 2%. The Bank of Japan keeps on printing money, but there's no inflation. And if there's no inflation, then in these aging societies, then how is interest is going to go? So I think there's so much growth to come and so much capital to come. I hope and I think, हिंदी पिक्चर में बोलते हैं ना कि दुल्हन को बुलाओ, क्या मुहूर्त का समय हो गया है, तो ऐसे ही बात है कि अब इंडिया का मुहूर्त हो गया है.
So, Dulan ka samay ho gaya hai, but for somebody looking at a happy family, when do you think the rewards and dividends will be reflected for Indian investors? You think it will be an ongoing process? You think this decade belongs to us?
Mr. Dalmia, the decade doesn't belong to us, the century belongs to it. It's going to be Indian century.
Very good. Bhaiya, very little is spoken about your private investment. You run with a team of 2 or 3 people and you have invested some of the companies which are well known to the world, like Metro Shoes, like you made a phenomenal investment in Star Health. Your money is almost tripled or gone 4 times in matter of 1.5 to 2 years. You've invested in Nazara, you invested in Concord. Can you, explain how your experience has been and how you are able to make such decisions across variety of sector, across public markets, across private markets?
What I feel is, see, I invested in Metro in 2006.
Sure.
I invested in Concord in 2009.
Sure.
I invested in a company called Venturesengage in 2009. So see, my investment horizons are far greater.
Sure.
And I started with this with very, when they were very small companies. When I invested in Metro, the turnover was 60 crores, 80 crores.
Sure.
And I think last year the turnover was about 1400 crores.
And if I'm not mistaken, you only paid what, 35-40 crores to buy?
I paid, that's right. So the question is that I have long time horizons.
Sure.
I have patience.
Sure.
Right. And see, I judge the opportunity and the person and the valuation.
Sure.
And then I leave it on the future. So I don't know. See, but I'm not doing much private. Of course, I'm doing 3 new investments now at the moment.
The pace at which you can take a decision. I remember in the middle of the pandemic calling you, Bhaiya, bhel acha lagta hai. Before I kept the phone down, you told me, maine to 1.25 crore le liya hai. How do you take such decisions, and you take those decisions with a friction of a second, crores of rupees?
Remember one thing, never go against the trend.
Sure.
The trend is upward.
Yeah.
The stocks are battered.
Sure.
BAIL, for example, was 10% of its high price.
Sure.
You expect that a capital cycle will take place in India.
Sure.
And you look for opportunity, and when you see opportunity, why wait? Seize it.
Sure.
Don't wait, seize it. Markets don't give you time.
Bhaiya, I want to quote you on risk. I read it somewhere where you had written an article, and it says there is a very common problem for all of us in life. We hesitate while taking risks. However, life is also a great challenge. And don't we all risk it? Hence, the advice is, risk it. You might discover a new passion in yourself. Can you elaborate on your thesis of how you take risk, how you take bet, how you leverage? Where even very well seasoned investor like Warren Buffett, they say don't leverage. But you are someone who is openly saying leverage, but you know how much to bet, what to bet. This will be very interesting for everyone to hear.
See, I will say one thing, that I have 2 interests in life, markets and movement.
Sure.
They are both concerned with 4-letter words. Markets, movement with love, and markets with risk.
Sure.
And I have, I left without taking a job, I came to the market with 5,000 rupees, I'm a risk taker. And now the risk taking has become a habit.
Sure.
But see, you must leverage, and leverage extremely when you think the market is giving you unbelievable opportunity. I mean, you have Great Eastern available at 12% yield, at half book value, and at 1/3 street value.
Sure.
And 12% yield, a Standard Chartered would give him money at 9%. I mean, I would sell my wife's bangles and buy Great Eastern. So there have been occasions when markets give you extreme opportunity.
So that is when you leverage.
But remember one thing, leverage has no mother, leverage has no emotions, right? Leverage has no sympathy.
Sure.
If you go wrong, nobody is going to save you.
Sure.
Have no emotions.
Sure.
In March, in 4 trading days, I sold 400 crores worth of shares.
Sure.
And my instruction to my dealer was, वापिस नहीं आना, शेयर बेच के आना.
One more question on the short side. Rakesh Jhunjhunwala as a trader is equally successful as Rakesh Jhunjhunwala as an investor. And it's a delight to see both parts of yours, how you can distinguish, how you can differentiate. I'm asking you as a practical sense. We know that 33% of the world market cap is like technology stocks. There is clear sign of bubble building up in some of the pockets in the technology stocks. If you had the flexibility to short some of these companies, what will you look for?
What I would look for is, one, a reversal in the fundamentals.
Sure.
Of each individual company.
Sure.
And then an extreme commitment. See, markets, George Soros made the £1 billion against the pound and the mark.
Sure.
He said from the day first, when they put the EMU, European Monetary Mechanism, he said it will not last.
Sure.
Because Germany and Britain will not align their monetary policy.
Sure.
And therefore the currencies cannot be. But he waited until the time when he knew that now it has to break.
Sure.
So in share bazaar, in the stock market, time se zyada timing ka importance.
But that's what I'm asking.
So therefore, just because a stock has gone up 80 times, like someone told me sell Asian Paints 80 times. I told him you sell it and see what will happen.
Sure.
So just because a stock has gone up to short it, or value is, you could value short Tesla at 400 billion, it becomes 600 billion.
Sure.
So unless and until now facts are appearing that there is competition emerging.
Sure.
From the traditional automakers in the electrical space.
Sure.
So once that is proven,
sure,
right, and then there's a frenzy. That is a time to short.
Sure.
But I don't trade out, invest outside India.
Sure.
And share bazaar has stock market has one principle. Just because something has gone up, you sell it.
Sure.
Or something has gone down, you buy it. Never do it in your life.
Sure.
The differentiated companies in India, a DMart, a Titan, an Indigo, Bajaj Finance, what do you think would be the differentiating factor for companies, and what should shareholders look at when it comes to investing in this decade? Because every decade the factors, whether it is inflation, macro, valuation, the backdrop changes. Given that we are in a world dominated with technology and information, what changes for an investor in this decade?
There is information overflow. The speed with which information is transmitted, and the speed and the quantum of information that or data which is available is unbelievable. And second thing, there is volatility. The basic principles of investing have remained the same and will remain the same forever, I think. But what has changed is the velocity and the availability of information. And second thing is the volatility, both in terms of the life cycle of companies and in the terms of prices. I think that's what has changed in the last 5 decades.
Mr. Jhunjhunwala, what will be your advice to the Robin Hood investors, the investors which in a sense have taken up birth in the pandemic crisis? A lot of new investors have come to stock markets believing that stock market is the place for instant gratification, and they've had initial success. What would you advise to them?
First thing I tell them, don't forget this is not a race course. And all this volume of fluctuation that games gap, I don't know which company in America, I think is very damaging for investors. Most investors are going to lose money in that. So I think for the place, if you get on debt 6% return, your target should get 15 to 24% return on equity, right? And don't involve yourself in all this daily gambling, where stocks go by 40% and 50% every day. I think, and your life is about attitudes. So the mature attitude is to invest safely, give your money to experienced people to invest, to mutual funds, to fund managers, and expect a return which is reasonable. Everything in life is about maturity. Sure. And don't go on scaling your bets.
Sure.
And invest your own money, not your father-in-law or father's money.
Sure. But yeah, in a similar lines, you have seen so many successful companies and so many successful entrepreneurs, right? And again, this is the economic conclave. A lot of entrepreneurs who are young, budding, have ambition, dream, are listening to you. What will be your advice to them for consistent wealth creation, some large wealth creation? What will be your message?
See, first is you got to be in an industry which is growing. There has to be large opportunity.
Sure.
Right?
Yeah.
Second, I think corporate governance. Because, see, corporate governance is a very wide word.
Sure.
Corporate governance is not only corporate governance attitude towards society, towards customers, towards employees, towards stakeholders, sharing fairly, not taking undue risk, according to me, is also part of corporate governance.
Sure.
Third, I think, is technology and the ability to change.
Sure.
Fourth is there has to be frugality.
Sure.
You know, I give Indigo and DMart as extreme companies who use frugality.
Sure.
And I think companies which are patient,
Sure.
you know, if the race is not going to get finished tomorrow, then I always think the tortoise wins against the hare.
Sure.
So growth is a process, don't try to sidestep it.
Sure.
So for long-term return, I think these are the basic principles, and I think recognize change.
Sure.
And you know, a lot of large companies can grow big. I feel entrepreneurs don't want to give up the power.
Sure.
But companies where you delegate are the only companies which can scale.
Sure.
I think these are the broad
Yeah,
principles.
you will still see companies like Titan, DMart over the next 20 years where your money will be 50 times, 100 times over a period of time.
When I invested in Titan, I didn't think my money will be 50 times.
But that's what I'm saying. Do you think there is still a possibility of that kind of return?
Not is possible. There is extreme. There is a lot of possibility. Who knows the future?
Sure.
Therefore, but you must change.
Sure.
When I bought Titan, I had a different thought. As time progressed and I learned more and I saw its performance, my thought changed.
Sure.
So see, the market is all about the ability to change, the ability to learn.
If you had last 20 years to relive again, you know, is there any regret? Is there anything which will change? Like you did not invest in MNC companies, or you did not invest
I
in...
have no regret in life.
Sure.
I only wish I had better personal habits and I exercise more.
Sure.
As for the life is not about regrets, it's about learnings,
Sure.
according to me.
Thank you, Mr. Jhunjhunwala. Thank you, Madhusudan Kela.
Thank you, gentlemen, for that.